Any industry that's consuming raw materials has an interest in keeping those prices as low as they can. Of course they do. But do they have the power to do that? Is Tesla powerful enough to keep the price of silver low because they use them in their solar panels and in their cars? Well, if they had that power, why haven't they kept the price of copper low? So it seems to me that if you're going to say
that's my follow-up question. Yeah, but yes, yeah.
If you're going to say that these nefarious forces behind the scenes there are specifically keeping the price of silver down to make their industrial processes more efficient or cheaper for them, well, why don't they do the same thing with everything else? So there's a little bit of a story consistency issue there. The other thing, though, is if it's I'm going to get hate mail for this, but I'll throw it out there. If it's these companies that are keeping the price of silver down, well, what about the story that it's the governments that are keeping the price of silver down? If you believe that this is silver and gold are being actively suppressed and have been for decades by central banks, well, that's enough to explain it. Either one of these explanations actually could exist independently, and who knows which one is true. Now, I'm not saying I never see any evidence of manipulation in the market, and I certainly, as a libertarian, can understand the incentives governments would have to try to keep prices of anything real down to protect their fiat currencies. So don't take this the wrong way. But I do think people should try to think logically about this. If you think one of these explanations is true, then the other one isn't. And if you don't have evidence to prove which one is true, you can suspect it, you can believe it, but it's a mistake to go around saying for a fact that this is true, absent the evidence that proves it.
Let's just humor us for a minute, okay, Lobo? Suppose Tesla or any solar manufacturing company, suppose industries that need silver actually needed or wanted to, quote unquote, suppress the price of silver. How would they do that, mechanics-wise? What could they use?
Well, the visible mechanism would be to set up some entity that accumulates silver in a gentle, non-price moving way, and then dumps it on the market at a time when there's thin trading. This is the sort of manipulation that we do see quite often, and I'm quite willing to call it manipulation, where you see large amounts of silver. And by the way, it's not just silver; it also happens in the gold space. I can't say that I've seen it in I can't say that I've seen it in industrial metals. But in silver and gold, the monetary metals, it does seem very strange that you get these very large orders in the thinnest part of trading, for which, if you're the seller, it makes no sense. Why, if I'm going to try to sell tons of gold, presumably I want as much money as I can get for that seller. Why would I sell it when there are few buyers out? I get that. So you accumulate gently a smaller position, you dump it violently to knock the the price of the metal down. And then you, as the consumer, at that lower price, can buy larger amounts to use for your business, or if you're a bank, to just trade it, flip it at higher prices later, or whatever nefarious reason you have.
Right. Okay. So then I guess question, rhetorical or otherwise, if they are doing it, they, meaning Tesla and Co and their peers, shouldn't the CFTC or other regulatory bodies have already been on their case and finding them like they did with JP Morgan and perhaps a few other cases for financial institutions in the past?
Right. Shouldn't they have been investigating Bernie Madoff when whistleblowers turned him in, I think more than once before he was caught? Shouldn't the government be able to deliver the freaking mail? Okay. Freaking, I said. So if you're going to trust the government to protect you from fraudsters and scamsters and other nefarious forces out there, I just suggest, wake up and smell the coffee, guys. This is grown-up land. There are bad actors out there, and don't expect Uncle Sam to protect you. This is why my teacher, back in the day, Doug Casey, he used to call the SEC the Swindlers Encouragement Commission, because it gives people this false sense of security. The government's actually out there protecting you from frauds. The fraudsters game any system. Whatever rules they set up, they'll find a way to game them. So protect yourself. Don't count on Uncle Sam to be Big Brother and look after you.
All right, fair enough. Here's another question now concerning the silver market. People are saying, well, have I've heard of people saying that silver should be trading much higher, like I said before, maybe perhaps even in the triple digits. Would you want, as an investor or even a consumer of electronics, would you want silver to be in the triple digits? What would that mean for the price of your phone, or the price of your laptop, or the price of an electric vehicle?
So it would be different if I answer as myself or if I answer as the average Joe. But actually, even then, and the reason why I say that is, the price of a phone is not a significant part of my budget, so it really doesn't matter. If the phone doubles in price, it's not going to change anything for me. The average person out there, sure, that's not a plus if the costs of their gadgets go up. That said, the cost of the silver that goes into a phone or a Tesla, the car that is, or even the solar panels, it's a very small, thin layer of silver mixed in with other things that goes in those solar panels. So they're fairly price insensitive. It's kind of like uranium in a nuclear power plant. You've got to have it, and it's such a small part of your overall cost that if the price doubles, triples, you're not going to put something else in the power plant. You can't just make your solar panels out of something else. So I don't see silver as the sort of thing that's going to make your phone double in price or even your solar panels double in price. It will be a marginal difference. Yes, it's an impact, but you know what? Prices go up. If you don't like it, talk to the governments that are printing the money that are causing the inflation. I can't prevent that. What I can do as a person seeing it coming is buy silver and profit from it.
Okay. Would you say silver is an inflation hedge like gold?
Absolutely. I know there's a lot of scuttlebutt because of all the new industrial applications of silver, that it's just another industrial metal. And governments don't keep silver anymore. There used to be government silver hoards in case they ever needed to put it back into circulation as coinage. They actually kept it far longer than they had any silver coinage. But those really, I think, over the course of the 90s, those government hoards were all dishoarded. But we still have, Basel III. We still have central banks even sort of, look what we do, not what we say, treating gold as money, but not silver. So I understand why there's a story out there, or the narrative out there, as we say today. Story has 2 syllables. Narrative has 4. What's wrong with story? But anyway, the story is that silver is just an industrial metal, but I don't buy it. You just look at those charts on a daily basis. Gold and silver go together. Lately, with the silver squeeze, there's been a little bit of divergence there. But overall, silver responds to the price of gold more than anything else. Mm-hmm. And that tells me it's still a monetary metal.
I made the operative assumption that gold is an inflation hedge when I asked you, is silver an inflation hedge like gold? Let me just put it to you in a more neutral manner, Lobo. Do you think gold is still an inflation hedge, given that some would say that we already have inflation in our economy that may not be reflected yet in the government data, yet gold is still down? Anyway, I'll let you comment on that.
It's down now. You can't sweat the daily fluctuations. You can't sweat the short term. I've had people, I wrote an article, it's available for free at independentspeculator.com, called Don't Cherry Pick the Data. I had a guy challenge me on the monetary metals and the value of gold as a safe haven, because if I had bought at the peak in 1980, by 2000, I would have lost money. I would have made more money on any other investment. But why would you start with the peak in 1980? That's not a fair comparison. A more rational starting point would be 71, when Nixon severed the relationship between the dollar and gold. If we look at gold from then till now, it's up around 50 times. That sure looks like a reasonable proxy for inflation to me. So I understand that if you're long, and especially if you bought during last summer's heat, that it's disappointing to see prices go down, and it's painful if you bought anything and the price goes down and stays down longer than you want it. But you have to have some perspective here. And if you look at the big picture, there's nothing wrong with gold or silver. They're doing what they're supposed to do. And I think you just, again, and the reason why this matters, it's not just, oh, don't worry, just hodl, you'll be fine. If you understand the big picture and what's going on, you look at the money printing, you look at the profligacy in Congress, you look at the Fed with the needle just nailed into easy, and you look at the debt that's piling up. It's it has very clear and I think inescapable consequences for the whole economy and for monetary metals.
Okay.
And that gives me the confidence to buy. And I have been buying actively this year. Anything that I see that I like that goes on sale or that presents me with a value proposition, because I can talk about look at the big picture and don't worry about the dips, but I see them, and since I believe what I'm saying, I'm putting my money where my mouth is. I'm buying.
Sure. Lobo, let's talk about the gold-silver ratio now. It's been trending down ever since last year, from its peak at over 120 to now 69. So historically, it's been around 50 to 60. Has it more or less normalized now, Lobo?
Well, you say historically. I don't think of that as historic. That's a more recent band.
Okay.
Historically, you look at all of history, and you're looking more like the 15 to 19 ratio that was established throughout most of history.
Okay.
So there's an argument to be made that is nowhere near back to normal. That having been said, I think I wouldn't dismiss history. I'm not saying history is bunk, and I absolutely agree with the dictum that people who don't learn from history are doomed to repeat it. But things do change. The uses of silver have changed, and it's easier for me to see gold remonetized than silver. And the fact that the silver and gold ratio has been so different, I think, is not reflective of some anti-silver bias. It's reflective of the industrial differences now that we've seen. But that tells us something. If that's true, then the change and the reversion towards the more recent mean in that 60 range, that's really quite interesting. And here's something, we've talked about this a little bit before, David, and I have said before that I've never found this gold-silver ratio to be particularly useful as a guide, because yes, I can see when it's extreme, and anything that goes to an extreme has a tendency to revert to the mean. But that can happen, the alligator jaws can close by gold coming down to meet silver or by silver going up. So the fact that the ratio is extreme doesn't tell you which one it's going to be. There's no guidance there. And it turns out, though, that I was kind of wrong. Not kind of. I shouldn't be mealy-mouthed about this. I missed something. And that is, there is data. If you look at long-term silver charts, I've got an article on this, too, on the website available for free. It's called I Was Wrong, Rethinking the Gold-Silver Ratio. And there's a chart on there, and you can see I've circled a bunch of places where what happens is when the silver-gold ratio does start to move, and when it comes off of lows, then actually that does have predictive. It tends to be silver that goes up.
Okay. Let me
when you
just
see one of these changes, it has some predictive value there, and I can see that now, and I did not before. So my bad. I've learned from that. Because
I know we've spoke about this before, and you've always said that the gold silver ratio has not. Okay, let's follow up on this next time and talk about why you changed your mind. We're running out of time.
Let me just wrap up
sake.
by saying that the sort of exciting part of this is, of course, the biggest, baddest red circle of them all on that chart on the website is the one we just saw. Right, the ratio spiked incredibly, and the turnaround, if that past pattern holds, is actually very bullish for silver going forward this year.
Okay, well, given your new outlook on the ratio and given everything we talked about with the economy, of the three metals we discussed today, Lobo, copper, gold, and silver, which of these would you place most of your bets on if you had to for the rest of 2021?
Silver, no question. It's the win-win. It has the industrial. I mean, copper is my favorite industrial metal, my favorite EV play. Love copper, but it's not a monetary metal. I mean, the pennies are going to be phased out before they come back.
All right.
Gold, it's a monetary metal. It has a few industrial uses, but really, booming economy isn't going to do anything for gold. Silver gets both.
Fantastic. Lobo, we're going to follow up on what you just said. I think some people would disagree with you that we have a booming economy, but I think there are a lot of people who also would agree with you. So that's a point that we have to...
boom.
Anyway, Lobo, we have plenty more to follow up on in the next interview. So I look forward to speaking with you again very soon. Thank you for your time today.
Thank you, David.
And thank you for watching Kiko News. I'm David Lin.